All right, so there are a few worksheets that I would like for you guys to introduce now that we're moving on to week 2. Now, for those who are using Excel, you're still going to be using the same exact workbooks. So you need your general journal, you need your general ledger, your subsidiary ledger, and if we get there today, I want you to also, we're going to introduce to you the inventory worksheet. So that's something new that we're going to be looking at. Now, if you are downloading the actual Word file, you do need to have on the side the inventory worksheet as well as the payroll worksheet. Now, for the payroll worksheet, that is actually going to be located in your subsidiary ledger under your employees because, you know, it's easier to compile things together in one workbook. However, for the worksheets that I've provided for you, I don't want to overload you with way too many papers all at once. And, then you're going to have to spend the time to try to keep yourself organized and blah, 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 blah. So in this case, I want to keep you organized by doing a week-to-week basis if you're doing the worksheets. However, if you are doing the workbooks, you only need to, out of this entire course, you will only be needing to use 4 workbooks until we reach the end of our week. That's when you're going to need your financial form workbook, all right? That's where we do the trial balance and whatnot, right? But that's on the end of the week of every week. So you don't need to utilize that one all the time. The primary ones that you will be using is your journal, ledger, and the subsidiary ledger, and your inventory worksheet, okay? And we'll be looking into that when we move into week 3 and week 4. Once we reach to week 5, that is where we're going to be introducing to the depreciation table, and we're going to be also utilizing the financial forms when we actually start closing out our books and properly piecing together our financial reports, okay? With that being said, Excel users, you will only be using 4 for now. The worksheet users, you are going to be dealing with a lot of worksheets, okay? Because again, each workbook for Excel has a bunch of sheets that are going to be integrated. But so for week 2, what you're primarily going to be needing that's actually new is your payroll sheet and your inventory worksheet. But for today, I don't believe we will reach the payroll until quite a few times from now. So we'll see how far we get. If we move actually pretty quickly, then we could just pull that sheet quickly. All right. So let me go ahead and get my journal, and here's my scenario. All right. So again, what we're going to do is we're going to be continuing from our previous section. So here, the general workbook. Where all my answers go? Let me see if I'm in the right one. I should be in answers. That's so strange. All my answers are gone. Okay. Did I save them somewhere else? Okay, here it is. Here's the general workbook I'm looking for, right here. Okay, so we last left off on page 2 of our general journal, okay? So now we're going to continue on with week 2 on page 3 of the workbook. Okay, so with that being said, so I think I tapped the wrong files. So I'm going to go ahead and take a second to open those all up. Okay, sorry, I do apologize for that. Okay, so with that being said, what has happened on the very next day, which is going to be the 8th of June. What happened here?
Purchase truck from Honest Rob Auto dealership for 58,900.
Okay.
Tax of 2,340 and 90.
Mm-hmm.
Documentation fees 968. Down payment of 2987.
Mm. Okay, what else is going to be also going to be part of
Aside,
this?
there's a car loan or truck loan
Mm-hmm.
from this one from the bank. The
Mm-hmm.
interest of wow 20% of each month for a 3 year. Oh, that's a principal. I'm sorry. 3 year loan
Mm-hmm.
at 3% interest,
Mm-hmm.
payable on the 20th of each month. Uh, Monthly payment 849.81.
Okay. So here,
General Lord, I'm sorry, General Dorno,
mm-hmm.
chart of account 17010
17010 is for the what?
for the chart of account COA for the truck
For the truck. Okay.
debit.
So here I've already given you the answer, but I want to explain what has happened here. First off, the truck. How much is the actual truck?
289. Oh, well, we have to include all those taxes and those documents in there.
Exactly, because what is a truck to us? What kind of asset is a truck?
Fixed.
It's 100% a fixed asset. So therefore, what do we need to include? We need to include every single cost it does to make sure that we get the asset to the store, but ultimately to get the asset ready off into service. So in this case, we need to make sure that we calculate all of its fees, all of its taxes, everything is included. Okay? Second thing that we also need to know is oftentimes when you actually go get a car, when do you actually depreciate it?
The first day you take it out from the dealer.
Exactly. The minute you drive off the street, you're going to depreciate it. That's the very starting point, okay? So, with that being said, therefore, we need to make sure that we recognize these few things that we need to include all the costs, okay? And then here we made a down payment, right? We made a down payment of $2,987. Okay. With that, you're also going to include that we also pulled out a truck loan. So we need to make a monthly payment. Now, when does usually your truck loan actually start? Or I'm sorry, when does interest actually hit you when you've actually started your truck loan?
Day one.
Day one.
That it starts calculating, but when do you actually get charged?
First car note.
Say that again?
The first note that you have to pay the month with the month after. The
Correct.
first.
Correct. You start paying interest the following month. You don't get charged the interest right away because you just bought the car. Other chances that maybe you might return it. XYZ. So with that kind of sense, we don't need to start calculating we start calculating the interest, obviously. It starts accruing the day you drive it off. But, however, you don't pay until the following month when you receive a bill. Okay? So in this case, we only care for two things. We made a truck loan, we made a deposit, and we just acquired a truck. So in this case, let's go ahead and journalize it. So again, the date is going to be June 8th. Okay? And we got a truck. All right, and you said it was
17010.
1710. Okay. All right, and it's for the total amount. So let's go ahead and add this all up, which I've already added it up for you. It should give you a grand total of $32,208.90. Okay.
It's after the down payment, right?
Say that again.
That's after the down payment.
Well, remember, your truck is worth for the total amount.
Oh, so, yeah, and then you subtract the down payment,
You subtract the down payment to determine how much left you have to pay for the loan.
which is the 32. Okay.
No. Your total cost of your truck is going to include everything. The down payment is only going to lessen your loan that you have. But your truck is going to be for the full purchase value.
Yeah, but what I'm saying is, the one you, the in, what we input in the debit subtract the down payment. That's what you came up with, the 32,208.90.
Lynette, calculate all of this.
It came out 35 something.
How did you get 35?
28.9 plus all those fees, tax, down payment, and the fees.
You don't need to include the down payment. The down payment goes towards the truck, as in it decreases the amount that you owe to the bank.
I calculated all those figures, and then I subtracted the down payment, which came out also the same. Yeah, I get your point there.
Okay, so your truck should be, for the truck that it's priced at, any taxes that you have to include, any documentation fees, so registration fees, right? And then that's it. That's all the car is worth. By you placing a down payment, that means from the bank's perspective, you're supposed to owe $32,208.90. However, because you placed a down payment, you're lowering the amount of the bank loan that you owe. So you're decreasing your payments every single time. Okay? And usually you need a down payment in order to get a car, because if you don't have a down payment, I know they say, usually what happens if you don't have a down payment, what they're going to do is they're going to require you to pay the tax before you could drive it off. But in this case, I made a down payment, okay, of $2,987. So I wrote a check, so I need to make sure that I write a check for the 2,987, which should give me a grand total, right, of my loan to be $29,221.90. Okay, there you go. All right, and I have a truck loan. Can you tell me what that account number is?
28020.
28080.
28020. 20.
Okay, truck loan is going to be 2808. Now, first things first is I wrote a check. So where do I go?
Record.
Yes, check register. So here on June 8th, okay, so June 8th, I wrote a check for $2,987. And who is it to?
To the dealer. Honest Rob. Auto dealership.
Honest Rob's Auto. What is it? Auto dealership. Okay, Honest Rob's Auto Dealership. And what check number is this?
1508.
1508. So now I can go to my journal and I can complete my I can complete my description by saying, okay, who did I write the check? Okay, who's my vendor? Honest Rob's Auto Dealership, comma, check number 1508. Okay. Now that I completed this now, I need to go to my ledger and I need to update. It. So here is my ledger. Okay. Actually, whoa, wrong one. This is not my ledger. Subsidiary ledger. Okay, so here's my ledger. So first thing I'm dealing with is a fixed asset. So I'm going to go ahead and find my truck, which should be under my assets, right? If we know it's 17. So we know it's going to fall under vehicles because that's the main account. So here is a printer. I missed it. Here you go, truck. Okay, this should be page 14 on the Word document. Okay, and just like how you journalized it in your journal, you're going to reflect it into your thing. So here, I'm going to go ahead and write the date, June 8, truck. Now, in my notes, I'm going to make sure I fill out that there was tax and documentation fees. All right, post reference, general journal number 3. My debit is going to be for the 32,208.90. And of course, because this is my first entry in here, it's going to reflect that my normal balance is going to be for the 32,208.90. Okay. Then the next thing I have to do is my checking account. So scroll all the way up to page 1. Okay, I wrote my check number out to 1508. General journal number 3. Okay, and this time I'm crediting my account for 2987, which therefore it should decrease my amount by roughly $3,000. So here I started out with $10,189. Now I'm down to $7,202.42. Okay. Then we have a loan. So here we're going to finally dive in to our liabilities and we're going to scroll all the way down till we find our truck loan. So it should be the very last thing on your workbook, truck loan. Very last table. Okay. So 6-8. This is where you can go ahead and put as much information as is when you're dealing with this loan, okay? So as we can go ahead and look in our scenario, we know that this loan is for 3 years, okay? And we know that it's 3% interest on obviously the principal with its interest payable, okay? And we know that it's going to be due every 20th of each month, okay? So what you can do is you can write in the National Bank account number 123987. You can fill as much information as you want. But in this case, I'm only going to put the most important thing, which is that this loan is for 3 years and it's for 3%. Okay? So 3 years. And it is 3% APR. Okay. Post reference is going to be General Journal number 3. And it's a credit that we need to place in here. So 29,208.90. Actually, not 208. It's 29. So it is 29,221.90. All right, and I'm going to there you go. So 29,221.90 is going to be on our credit side. So therefore, my credit balance is going to be for the same exact amount. Okay, for 29,221.90. All right. Now we've completed our ledger. Okay. So now where do we go? Subsidiary. Yes, we're dealing with Honest Rob's little shop here. So what you're going to do is, let me see, let's go find Honest Rob. Here's Honest Rob. Okay. I'm going to go ahead and indicate the date here. All right. Here you can write that you got a truck. Okay. Invoice number. Was there an invoice number?
None, but there was an account number
All right.
on the loan.
We'll talk about that in a second. So we don't have an invoice number. Do we have a post reference? Yes, we do. General Journal number 3. Okay. Terms and discounts don't apply. But what was my actual invoice amount? What is my actual invoice amount?
Is it the total amount?
32,000
Say that again, Tennyson.
32,208 cents 90.
All right. Now, because you said that, I'm going to ask you a question. Do you owe Rob anything once you've completed the paperwork and you drive your car off?
No.
No. You owe the bank. Thank you. So, in this case, what is my receipt going to show up to be?
28, was it 2987?
2987 is correct because this is the amount that I paid to Mr. Rob. But from there on, and I move on forth, I no longer owe Rob anything. I owe the bank, the National Bank. Okay, so here I'm going to go ahead and plug in that that I actually paid this amount to 987, right? Just in case I need to go back to there and I need I need to refund or something or return the truck because maybe we don't like the truck after all. But in this case, I'm going to make sure I write in here check 1508 and I wrote it to Honest Rob's and I paid for the $2,987 and 87 even. Okay? And that means I don't owe Rob anything because the next time I make a payment, it's not to Rob, it's to the bank. Okay? So this would basically covers just his portion of whatever he gets off, right? They get commission off of us, right? So that goes to whatever he pays for him, right? Because they did the documentations, they did all this. So we kind of paid towards that. The down payment is what the actual company earns. But with the loan, that's where we have to go ahead and fill that out. So you should be able to, you should have National Bank right here for Visa Gold, okay? So in this case, we don't actually have a section for the bank loan itself. This is only for the credit card statements. So with that being said, making sure that you have a notification every time you make a truck loan payment that you record it in your actual checking account. You don't technically have a subsidiary ledger for this just because technically your bank isn't your vendor, it's your bank account. Okay, so we do not have that section there. However, what you can do is you can create one. I did leave a blank ledger sheet for you. However, it is up to you. Again, this is dealing with your bank. So if you want to record it, then you may record it. But in this case, as a vendor, they're technically our bank. They're us in another sense. Okay. So it's surely up to you if you want to create one. You don't have to. In this case, I'm not going to, just because I know I have a bank loan. I know what my stuff is. It's underneath my truck loan. So I know what is to be expected. Okay? So I'm not going to go ahead and do that. So I am done for this little section here. Okay?
Lynn,
Yes.
real. So how did you get the 2,987? Was that the tax and the documentation?
No, that's just whatever we down paid. It's like when you go to the actual location, right? Let's say for example, I went to Subaru, right? When you paying the person up front for the down payment, what you're essentially doing is you're not paying the bank per se. You're paying the people to work for you to be able to drive off.
No, that wasn't my question.
Okay.
Because I'm looking at tax documentation and fees.
Uh-huh.
Add those two together to get the down payment or no?
No. It's whatever you want to put the down payment for.
Okay, I was just double checking because
Yeah.
looking at numbers. That's all I need to know.
Okay.
Thank you.
Yes, because the example was if you didn't place a down payment, what you're mandatory to do is you need to pay the tax. And who does the tax go to?
It goes to the government.
It goes to the government, but what you're doing is essentially you have to pay whoever you're working with to get the car. So if you don't do the down payment, you're mandatory to pay the tax, no matter what it is.
Just looking at the situation, because I was looking at the taxes and the documentation and fees and just adding those together because they came up with a different number. That's the only reason I was asking. I didn't have any other questions about the taxes because I get all that part.
So in this case, the down payment could be whatever amount that you want to place down. Okay, that's just decreasing how much you owe. But in this case, this covers the tax. My down payment is whatever I put. So that is that.
Heard.
Okay, so here we completed our transaction here. All right. So what has happened next?
Purchase order for 80 ceramic coffee mugs.
Ooh, okay, so we decided to place a purchase order for our coffee mugs. Okay, so what do we do with this transaction?
Put it in the purchase order.
Put it in the purchase order, but keep reading. What else is required?
Oh, total cost $196, $100 down payment.
$100 down payments because they're a new vendor to us. They can't trust us to make a $300 purchase without, giving them a little incentive to hold on to those items, right? So they want to make us at least require a 50% down or some type of $100 down payment. So in this case, let's go ahead and update the purchase order first, and then we can go ahead and solve for the rest. So purchase orders. Okay. I think I'm in the wrong one. There you go. Purchase orders. Okay. So this is June 8th for purchase order 305, which is correct. All right. Who's my vendor I am buying from?
All things ceramics.
All things ceramics. Okay. And what am I expecting to have?
80 coffee mugs.
We need 80 coffee mugs. Wait.
Or just ceramic coffee mugs.
Yes. I'm just going to go ahead and put 80 mugs. Okay. And what is my total estimated bill to be?
196.
196 even. Okay. Good. All right. Now, because they were required a down payment or a prepaid advanced payment, what I'm going to do is I'm going to go ahead and go to my ledger, of course. I'm sorry, my journal. All right, and I need to journalize this transaction because here I'm actually writing a check out in regards to this purchase order per se. So because I'm making a down payment, all right, this is going to be considered a prepaid account. Okay. So here you go. I'm going to write prepaid accounts. And I'm also going to be writing a check. All right. So what was my prepaid account number? All right, checking is 10-100. And now I need to go ahead and fill in that I wrote a $100 check. Okay. I wrote a $100 check to All Things Ceramics. Now let's go ahead and fill that in my check register because I wrote a check. So 68. All right. I wrote it for $100. And who did I write the checks out to?
All things ceramics.
All Things Ceramics. Okay, good. Now that I got my actual check number, which is 1509, I'm going to go ahead and update my general journal so I know what this transaction is. All right. So first things first, you need to have the vendor. Okay. You're going to need the purchase order number because that is what you're paying towards, right? You're paying towards this purchase order that we made. So PO number 170305, comma, the check number that I wrote was just 1509. Okay. So now I completed my journal. So I now need to go to my ledger so I can update all that information I placed in my journal. So in this case, I have a prepaid account. Prepaid accounts should be page 15 or 16 in your work sheets. Okay, so here's my deposits. Here are my prepaid accounts. So I'm going to go ahead and write the date. In my little notes or my items, I'm going to write down payment PMT. And I'm going to write to all things ceramics. Okay. General journal number 3. Okay. And I've increased it by $100, which therefore should make my account balance go from 7,826 to now 7,926. Okay, you increased it by $100. Right. Then I'm gonna scroll all the way up to my checking account because I did write a check for $100. 68. Check number 1509. General journal number 3. And this time I'm crediting my account for $100, which should now take me from $7,202.42 now down to $71.02.42. Okay. All right. I'll give you guys a few seconds to catch up. Okay. So once we've done that, now we can go ahead and make our way to our subsidiary ledger. Okay. So here we are. All things ceramics should be at the very top of your vendor's page. So for anyone who's working on the worksheet, it should be page 3. Very, very top of page 3. Okay. So here we are. I'm going to go ahead and indicate this right here. The date. Notes is going to be prepaid accounts for mugs. Okay. And then here you're going to write your purchase order because it's affecting your purchase order. 305. Post reference is going to be general journal number 3. All right. And in this case, now we have two areas where we're going to have to figure out, right? We haven't received the bill yet. So at least we can make notification right there that we haven't even received the bill yet. So with that being in mind, terms is not going to apply because we haven't received the bill yet, right? Now the question is, are you going to place it in the prepaid accounts or the invoice amount? Okay. Because we've made this advance payment, right? When we do receive the bill, that's where we're going to utilize the prepaid amount because we paid forth it. But in this case, because I'm only using my purchase order, I'm actually going to place that amount directly in my invoice amount. And because I did that, I made a payment to the invoice amount. So therefore, I should get that I owe this vendor nothing, but they owe us money. Okay? Because we've made it a payment already in place of the advance payment. Right? So we don't owe all things ceramic anything. However, on their books, they need to record that they have an unearned revenue, right? Because we as a customer had paid forth in advance. But because we're only dealing with our books on our end, all we need to record is what we did. Okay? So in this case, I've already updated my account. I made it clear that I made a payment, but the invoice amount is not 100, right? We have to wait till the bill gets here. However, this is applied to our purchase order number. Okay. All right. Okay. So now we can go back to our journal since we completed our ledger and we've also completed our subsidiary ledger. Okay, so here's our scenario. Okay, what has happened next?
We received our furniture.
We received furniture. What specifically did we receive?
Bistro table and chair sets.
Perfect. We received our bistro tables and chairs. Here they give us terms, right? Here's the delivery date. Everything's included. Here's the tax that they charge and a delivery charge. So our grand total is going to be for the $6,605.08. Okay. So with that being said, we're going to look up in a chart of accounts to see if we have tables, bistro tables, and chairs.
$13,010.
13,010 right here, bistro, tables, and chairs. Okay? Because this is also another fixed asset, we're going to include all the stuff it makes it to get ready to be placed in service. So general journal, okay, we acquired an asset, right? And because we received a bill, what's our automatic assumption? Are we going to pay it now or are we going to pay it later?
Later, because it's on account.
Good, good. So here, I'm going to place the date. Okay, so the date I have here is, my account is going to be bistro, tables, and chairs for 13, did you say 10?
Yes.
13, good. Okay, and it's going to be for the grand total amount because we only have one item and we only have one item. And that's it. Okay, we do not need to separate each set of chair and table, right? They're all going to be depreciated as a group, all right? Because it's the same item. They're typically furniture, so typically they'll all go, because they're all from the same company and they're not all different, right? They're all essentially the same exact table and chair, right? We bought 10 sets of them. 10 sets of them. So therefore, we're going to just grab the total amount and just depreciate it as a group. So in this case, my grand total is going to cost me $6,605.08. Okay, 660508. And again, we placed it on an accounts payable, right? We received a bill and we're not going to pay them yet. We're going to pay them later. So accounts payable is going to be there. Okay? And accounts payable should be $20,000. And it's going to be for the exact amount because we didn't make any payments at all. So my accounts payable is going to be for the 6605. Okay? And what you're going to place here is pretty much any information that you need in regards to this bill. So, for example, this is going to be to furniture store. Was there an invoice number to this? Invoice number 75. Okay. Right. And if you want to put terms, you can put terms. I'll go ahead and do it for this scenario. So net 15 is going to be my terms. Okay. Now, before we move on to anything, what was our very first thing that we were supposed to actually do?
Would the invoice number in the purchase order register?
Exactly. We need to, well, obviously the inventory manager is supposed to go ahead and check mark that we actually received our items. So in this case, it should be the very fourth purchase order number 304 for the tables and chairs for the 6,055. Okay, so in this case, I got it, I received it, and it was invoice number 75. Okay. Now let's go ahead and go to our ledger. Okay. All right, general journal. So I need my ledger account. All right, sorry for that. Okay, so I received a table. So let's go ahead and find my table in here. It's going to be under furniture. Here you go. Bistro, tables, and chairs. So 6, 8. I'm going to write that I have 10 sets. Okay. And that's pretty much it. Post reference is general journal number 3. My debit's going to be for the 660508. Okay. And because it's the start of my table, my normal balance should be the 660508. Okay. And then because we've also placed it on account, now we get to increase our liabilities, right? We get to increase our accounts payable. So in this case, I'm going to go ahead and write here. I'm going to go ahead and write invoice number 75. Instead of writing all the details in there, I'm just going to make sure that I can reference that this is from invoice number 75. General journal number 3. Okay, and it's a credit for the 660508. And therefore, my balance should now update to me going from owing $4,000 to now $10,000. So here, we're already not looking so hot. We owe so much money now. Okay? All right. So now that I updated my ledger, I'm going to go ahead and go to my subsidiary ledger. Okay. So I got to go back down to my infamous furniture store, right? I've made a couple little things in here, little notes in here. So now I received another bill from the furniture store. And this time I received my tables and chairs. Okay. Invoice is going to be invoice number 75. General journal number 3. Terms they gave us was net 15. So therefore, we don't get a discount date. because they didn't give us any discount. However, when is it going to be due? It's going to be due on the 23rd of June. Okay? And then lastly, we didn't make any prepaid accounts to it. However, what was our invoice amount? 660508. And we didn't make any payment to it yet. So therefore, if I were to drag down my formula here, it should tell me that I owe 66,508, bringing me to a grand total of owing a total of $9,000, $9,033.75. So I'm already owing, out of the $10,000, I'm already owing this vendor right here so much money. Okay. And they're all going to be due pretty soon. They're going to be due on the 23rd, the 22nd, and the 23rd. So I need to make sure I have enough money on the side to be able to pay for this. Okay. Back to my journal. All right. What happened next?
So Kim Robinson for the amount of 1,000.
And how do you pay somebody?
Always a check.
Yes. Check is always number one because it leaves a paper trail. Okay, so I'm paying Miss Kim Robinson because I owe them $1,000. Go ahead, what was that?
No.
Okay. Okay. Because I originally placed this on an accounts payable, I'm making a payment towards it. I'm going to owe less money now, and I'm going to pay them off. So in this case, I'm going to decrease my accounts payable by debiting it, right? I'm lowering my amount that I owe. Okay. All right. And I'm also writing a check, and it says here that I wrote for check 1510. All right. But I'm going to double confirm that by actually placing that in my check register. So here, I know I wrote a check. And that's for, so I'm going to go to my check register. Am I moving along okay at a good pace? Is everyone okay at this pace?
I'm fine.
Okay. So here, I'm on June 10. I wrote a check for $1,000. Okay? And I wrote to Kim Robinson. Okay? I verified that it's check number 1510. So I'm going to go back to my journal and update this description, right? Kim Robinson. Right? Do I need to write anything else? I know there was an invoice number, and you need the check number. Good. I'm going to go ahead and take a look at my subsidiary ledger real quick to see what that invoice number was. So here's restaurant Kim Robinson. The invoice was $15.42. So I'm going to go back to my journal, and I'm going to indicate that this was for the invoice number 1542, and I paid it with a check number 1510. Okay. now, and I paid for the amount of $1,000. Okay. So before anything, I'm going to go to my subsidiary ledger. Okay, and I'm going to update my accounts. So in this case, I'm decreasing my accounts payable. So here I'm already on my accounts payable. So this should be page 16 or 17 on the worksheet. So here, this is my first debit account that I am actually going to place here. So on June 10, okay, I'm also going to write invoice number 1542. And if you like, go ahead and write the check number in here too. Check number 1510. Okay. General journal number 3. And I'm debiting my account for the 1,000. So here, because I placed my formula in here, it should recognize that I am decreasing my account. So I went from owing 10,000 to now to 9,000. Okay. And then I have to go to my assets. I have to go update my checking account for 610. Okay. And it's for check number 1510. General journal number 3. And I'm also going to be crediting again for another 1,000. So now our bank is reflecting a very low amount. We only have $6,000 left in our bank. And we owe $9,000. So on a ratio to how much you have in the bank and how much you owe, we're not doing so good. Okay? But that's usually typical for businesses. All right? Now that we've updated our ledger, our next thing we have to do is go to our subsidiary. So here we've already looked up Miss Kim Robinson. Now there are 2 ways you can do about this. Okay, I'm gonna show you. I'm gonna be using the second way. The first way that you could do is you can just go ahead and edit this piece of information right here. You can go ahead and write that you wrote a check number 1510, and you can automatically say I made the payment. Okay, so you can manipulate or go ahead and edit the information just like this. However, I don't like that. I'm going to show you how to properly do this, because this way it makes your transaction look a lot more cleaner, and it will also allow you to recognize even more details. For example, I'm going to go ahead and indicate that I created a second line of transaction for Kim Robinson. I'm going to put the date as the date that I made the payment, right? And I'm also going to right here fill in that I wrote the check number 1510. And what that's going to do is, and I said I did it towards the invoice for 1502. Now, by me creating the second line of information, not only am I'm validating that I made the payment date, right? I paid on this day. Second thing I'm going to do is I'm going to recognize that I made the payment. And here, this is where everything follows through, because for my point of reference, I wrote this check and I replaced it in my general journal number 3. Okay, so this is just a way to keep your ideas and your transactions a lot more organized. You can just fill it in, because now you no longer owe Kim Robinson, but what you're missing the details is, when did you actually make the payment? what check number did you use, and where did you place this piece of information? Well, in this case, my original transaction was on journal number 2. But I placed the information on the journal number 3. So that's what I'm doing here. I'm just separating and creating a more effective and more organized way of calculating this. Now, what I'm going to do is under here, obviously there's no terms because I'm making a payment. So there's no discount date, and the due date I've already reached there. So therefore these 3 things you can skip. Obviously there's no prepayment, and the invoice you already have it from above because you owe the $1,000. So how this is going to work is I'm going to go ahead and just enter in that I made a payment. What's going to happen is what you're going to do is you're going to drag down this formula, right? Remember how it's the invoice minus the prepaid amounts, the returns and allowances, the discount, and the payment. So what's going to happen is it's going to reflect that I paid a negative amount of 1,000. And if you summed up this little column right here, right, equals sum, you're going to notice that your amount that you owe went from $1,000 to now 0. Okay? So if you guys remember from before, I originally had, if I were to just shrink that, I originally had $1,000. I owe Kim Robinson $1,000. Now, with my payment that I placed here, and I'll pull the formula down, I now owe Kim Robinson nothing. And this way, I'm keeping my transactions clear and separate so I can recognize that the first transaction was me receiving the bill. Second transaction I did was me writing the check for the bill. Okay? And that's how I think it's the best way to update your subsidiary ledger. Okay? If you were to apply it by just using the first line item, it would automatically zero it out no matter what, because you would just place the payment here, right? So I'm going to go ahead and show you. If I were to place the payment here, it would automatically eliminate it. But the only few things that you have is you're going to be missing pieces of information. And that's not what we want. We want to make sure that we keep ourselves organized and making our transaction as clear as possible. So here, I had a bill for 1,000. I now made a payment, so now I subtracted 1,000, so I owe a grand total of $0. Okay. Any questions in regards of what we just did? We just made a payment, our first payment to a vendor. Okay. All right. So now back to my journal and back to our scenario. Okay. Now that we've already paid Miss Kim Robinson, what has happened next?
The bank approved a business credit card, the amount of 10,000 limit,
Mm-hmm.
with 18% interest
Mm-hmm.
on end of month balance. Payment due every 10th of the month,
Okay.
following month, basically, the first payment due.
Okay. So, what do we do with this transaction here?
Nothing.
But we can keep
Okay.
in our,
Adina said nothing. All right.
we can keep in the ledger that a credit card. No. I'm thinking at the only time you use that, you input information, there was when you use the credit card.
Correct. This piece of information, right, is definitely something you want to disclose in your notes to the financial statements. However, was there an actual transaction being done? Was there a transaction occurring?
No.
Not yet.
Good. Not yet. Okay? You can't even place this even in your subsidiary ledger, remember? Because we remember that little national bank Visa thing? When do you actually use a subsidiary ledger?
That is if you use transfer transfer, you use the card.
Correct. Yes. And on top of that, what's the first thing that you need to have? You need to have the bill. Okay? The bill's going to tell you the exact same description. It's going to tell you that you got charged 18% because you owe on this balance. So in this case, you don't even need to update your subsidiary ledger until you receive the actual bill for your first statement. So in this case, we can just acknowledge, right, that is piece of information that we need to save to our financial statements, okay? And this is definitely something that we need to mark, especially when the next bill comes around. We're going to start collecting interest, all right? But for now, no transaction has been made. All we know is we got a credit card and it's good for $10,000. All right? So then what has happened next?
We received our ceramic mugs.
We received our ceramic coffee mugs. Now, what else does it say at the very top?
Periodic weighted average.
Periodic weighted average, meaning what does this indicate to you? What is your coffee mugs?
Inventory.
It is part of inventory. Correct. So this is where, here we received the bill. This is where we're going to be utilizing our inventory worksheet. Okay? But let's do first things first because right now we didn't sell anything yet. So again, not that it matters, especially when we're doing periodic, but however, we do need to enter in all the information to get us our grand total. But here, let's go ahead and take a look at what this bill entails. Okay? First things first, we need to update our purchase orders. We need to ensure that we received these items. So I'm going to go to my purchase orders. And I'm going to recognize that I received these items on June 10. All right. Oh, not making a purchase order. I'm sorry. Well, let's go ahead and look at when our coffee mugs was. Here, we made the purchase order 3:05 on June 8th, and we received it. And it was invoice number 126. Okay. Now, we can go ahead and properly journalize our entry. Because we are receiving periodic inventory, how are we going to journalize this?
Amount due.
Say that again.
Amount due.
Okay, but what account am I going to be using? Because we're dealing with periodic inventory, what is my accounts going to look like?
Accounts receivable.
Not accounts receivable. We're not dealing with the customers.
Coffee mugs?
Say that again.
Coffee mugs?
We have Tennyson saying coffee mugs.
Expense.
Say that again, Lynette.
Expense.
What kind of expense?
Purchase expense.
Purchase expense, yes. Tennyson, for coffee mugs, you are going to be utilizing that for perpetual inventory. Right now, we're dealing with periodic inventory. So therefore, all of our purchases that we make are going to be expenses. So this is a real life transaction where we're going to realize that we have a purchase expense What else do we have?
The freight charge.
Yes. And what is that called?
Freight expense.
Freight expense. Okay, so by using your chart of accounts, can you tell me what account numbers is your purchase expense?
The freight expense is 60300.
Purchase expense is 61,000.
61,000. Okay, good. And then, of course, because we received the bill and they give us terms, what's the assumption?
Do we have to do accounts payable as well?
Yes, we do. Yes, right here, accounts payable. But hold on, hold that thought. What else did we do for this exact transaction? Here we received the bill. What does the bill tell us right here?
We made a prepayment. We did a down payment of 100.
We made a prepayment of $100. So therefore, we need to subtract out because that reduces our actual accounts payable, correct? So how much do we actually owe in grand total if you were to calculate it as is, right? If the total is $196, right? And they charged you freight of 100. So what's your grand total that you owe?
196.
No, without the down payment.
296.
296. So that's how much you owe. But because you made an advance payment, therefore it's reduced to now $196. So in this case, we need to recognize that, excuse me, we need to recognize that our total amount that we actually owe is going to be for $196. And our prepayment of $100 is going to go towards the amount that we owe, right? So our total purchases was for $196, correct? And our total freight was $100. Now, because we made an advance payment, we need to deduct that because now it's going towards the bill itself. So with that being said, we need to credit our prepaid accounts because now we're essentially using it or we're applying it to our invoice. And then we have a total amount that we actually owe. Okay, so accounts payable after that. So this is 18,600 and 20,000. Okay. So with that being said, our advance payment was for $100. And now our total amount that we owe is $196.90. Okay. And if we were to sum up our debits and credits, they should match 100% with $296. Right? So that is where this is. Okay? Before we can go ahead and do anything, I'm going to finish off my journal here. I'm going to say, well, this was from All Things Ceramics. Okay? My invoice number was number 126. And I'm also going to include my terms, which is for 1% 10 if I pay within 10 days. If not, the whole thing is due in 20. So this person's only giving me 20 days to pay. Okay? All right. Let's go ahead and update our general ledger. Okay, so here we're dealing with a total of 4 accounts. We have a purchase expense, a freight expense, And we have prepaid accounts as well as accounts payable. So I'm going to go ahead and start off first with my operating expenses. So I'm going to do it in order as I see it. So in this case, I'm going to find my purchase expense. Here it is, purchase expense. I'm going to indicate I have the date wrong, so June 10. My notes here, or my items, is going to be 80 ceramic. Actually, I'm just going to write coffee mugs. Shorten it up. 80 coffee mugs. All right, my reference is going to still be General Journal number 3. And I debited my account by $196. Therefore, since this is my first purchase I've ever made, it's going to be for the grand total of $196. Okay. Now, I'm going to scroll up to find my freight expense, which is right here, freight expense, because I have to keep it separate. 610. My items is going to be the same thing. 80 coffee mugs, right? That's the shipment on the 80 coffee mugs. Okay. Post reference, General Journal 3. And I debited for the amount of 100. And because this is my first one, it's going to be for 100. Okay. So that's my expenses there. Now I'm going to go to my next account, which is my prepaid account, right? And I'm going to go ahead and scroll all the way down until I find it. I'm at equipment. Okay, so here's miscellaneous expense. So I missed it already. So prepaid accounts right here. Okay. June 10. And then I'm going to go ahead and write invoice number 126. Because that's where I got to apply my advanced payment. So therefore, because I reflected it in my journal as a credit, it's going to reflect in my ledger as a credit. And then if I have the formula here, I'm going to pull it down. Now it's going to tell me that it's exactly from what I started before. I went from 79 to now 78. Right? I credit the account. Lastly, we're going to update is going to be my accounts payable, which is a liability. And we're increasing the amount that we owe. And in this case, I'm going to go ahead and write invoice number 126 so I know exactly what that invoice is. And because I'm increasing it on the credit side, I'm going to increase it for a total of $196. So therefore, it should bring my value from $9,683.24 to $9,879.24. So I've increased it by that much. All right. Now we can go ahead and utilize our subsidiary ledger. Okay. So this is where it's going to get a little confusing. Okay. So let me go ahead and find all things ceramic. So here's my prepaid accounts, right? I'm going to go ahead and recognize that on June 10 was the date. What I'm going to say is you can write whatever description you want. This is for 80 coffee mugs, right? right? Invoice is now going to be number 126, right? And we know that this is going to be general journal number 3, okay? Were we given terms? Yes, we were. Okay? Yes, we were. And what was this terms amount about? What was our terms?
110 net 20.
110 net 20. So therefore, I'm going to place that exact information here. So I'm going to write 1%, 10, comma,
Net 20.
net 20. Okay? Net 20. Okay, and I'm going to expand this so it looks better. There you go. So that means, what is my due date going to look like? I mean, what is my discount date going to look like? What is my discount date going to look like?
June 20.
So 10 days after the 10th is going to be June 20. So that means if I pay within June 20, I will receive the 1% discount. If not, when is it actually the whole thing due?
30.
It's going to be due June 30. Okay? Now this is where it's going to start getting confusing. All right? Did we have a prepaid amount?
Yeah.
Yes, we did. How much is my actual invoice originally supposed to be?
296.
296. Correct. All right? And did we make any payments?
Yeah, you did the 100.
We've all, but look,
Down payment. No.
the down payment was from above, the transaction from above. Did we pay anything as of June 10th?
No.
No, we didn't. So if you were to pull this formula down, which if you remember what it was, right? We took the invoice amount, subtracted any prepaid amounts, subtracted any returns and allowances, and also subtract any discounts as well as payments. And if we pull that formula down, it shows us that now we owe a grand total of 196. Okay? And if we were to do the formula here, we only owe all things ceramics as of June 10, a total of 196. So that's how this table works. And this is how you fill it out as well. Okay? As we make payments, we're just going to go down the line. Okay? Now, the last thing that we have to do is going to be what I was trying to introduce to you this morning, is we're going to finally tap into our inventory worksheet. Okay, so here it is, the inventory worksheet. I've actually already created the table itself, and I also let you know what you need to do. Now this is the periodic, again, inventory for weighted average, and it's for the coffee mugs. So here, we're only going to place that we receive the inventory items and that we need to calculate our cost per item in case we do sell it. So in this case, we received the inventory items on June 10, right? What was the quantity that we wanted? What was the quantity that the 80, good. And do you guys remember what the cost per unit was? 245. All right. So then your total purchases should be 196, which we know because that's what we journalized. All right. What was our freight? 100, bringing us a grand total of what? 296. All right, and I'm going to go ahead and format this. Okay. All right, so my cost per item was, what was that again?
19,000.
Oh, okay, hold on. Yeah, I need to fix that. Let me. Oh, wait, not times, it's plus. Okay, so now it's 296. So now my cost per item is going to be $370. Good, and it's even. That means when we start selling our items, this is what it's going to reflect. It's going to reflect that it is $3.70 per cup that we are going to sell. Okay? And that's how you utilize your inventory worksheet for your periodic inventory, right? That doesn't mean we're not going to see examples of perpetual inventory, right? Okay. So let's see what has happened next. Actually, you know what? Let's stop here and let's call it a break. Since it is 10:12, I'm going to call it at 10:15. So if you guys don't have any questions up to this point, you may take a break and please be back by 10:30 and we shall continue the next section. All right, so right here, I'm going to leave it here and we'll come back to this.